When we think of modern conflicts, we often picture something surgical and digital, a clean push of a button instead of boots on the ground, shattering an adversary's capabilities in an instant. For decades, Western powers have relied on economic sanctions as a supposedly clean alternative to violence. Policymakers call them a silent remedy, a way to pressure foreign governments into compliance by freezing their assets or blocking their trade, all without firing a single shot. The problem is, the data tells a completely different story. Studies tracking these financial blockades show that up to 95% of the time, they fail to achieve their stated foreign policy goals. But despite that failure rate, Washington keeps using them. What started as a diplomatic tool has morphed into a slow, grinding form of economic warfare. And ironically, by overusing this tool, the United States is quietly cannibalizing the foundation of its own global power. If you wanted to squeeze a rogue nation in the 1990s, you had to deploy a massive physical presence. It meant maintaining an expensive, multi-year naval blockade off a coastline just to stop physical ships from moving physical goods. Today, that physical blockade has been replaced by a framework researchers call weaponized interdependence. In this new model, the extreme connectivity of the modern world becomes the trap itself. The modern global economy functions as a massive hub-and-spoke network. Instead of thousands of countries trading directly with one another, almost all international financial transactions route through a handful of central clearing nodes located squarely within the U.S. financial system. Because those central nodes are subject to American jurisdiction, the U.S. Treasury Department holds incredible power. By simply signing a regulatory document, they can create a choke point effect, instantly revoking an entire nation's ability to clear transactions and isolating them from global trade. America's ultimate geopolitical leverage no longer relies on controlling the world's oceans. Today, it comes from controlling the digital plumbing of the global economy. SWIFT functions as the essential nervous system for global banking. Based in Belgium as a cooperative, it securely transmits the standardized messages that move trillions of dollars across borders every single day. The U.S. weaponizes this system using mechanics called secondary sanctions. Washington essentially tells neutral foreign banks that they have a choice. They can either stop doing business with a targeted country, or they will lose their own access to U.S. dollars. For a global bank, losing dollar access is a death sentence. We saw how devastating this can be during the campaigns against Iran. Under U.S. pressure, SWIFT expelled Iranian banks, culminating in the 2018 ban. This isolation triggered a massive economic shock. Inflation surged, businesses entered risky networks, and civilians struggled to import food and medicine. While this economic siege successfully isolated Tehran, it produced a massive psychological backfire globally. Watching Iran's economy get switched off overnight terrified other sovereign nations. They suddenly realized they were operating inside a financial panopticon entirely controlled by Washington. That realization sparked a quiet systemic panic. Rival economic blocs immediately began rapidly decoupling their infrastructure from U.S. financial jurisdiction to protect themselves. This chart shows how aggressively China has maneuvered to limit its exposure. Over the last decade, Beijing has deliberately shed its U.S. debt, dropping its treasury holdings from $1.32 trillion down to roughly $756 billion. At the exact same time they were dumping U.S. debt, central banks in both China and Russia went on a historic gold buying spree. They are actively hoarding physical gold to construct sovereign reserves immune to digital sanctions. But you cannot run a modern economy on gold bars alone. You need digital plumbing. So China engineered the Cross-Border Interbank Payment System, or CIPS, explicitly designed to serve as a direct substitute for the SWIFT messaging network. CIPS has matured into a functioning alternative to Western rails, processing over $12 trillion in transactions annually. And this defensive decoupling is causing serious domestic collateral damage back in the U.S. By strictly blacklisting foreign entities and limiting tech exports, Washington has inadvertently severed supply chains, costing U.S. tech firms an estimated $130 billion in lost market capitalization. Instead of successfully isolating its adversaries, U.S. policy is effectively forcing its competitors to engineer a parallel, sanction-proof global economy. The global dominance of the U.S. dollar rests on a foundation of institutional trust and perceived neutrality. While military and economic size provide weight, Foreign investors hold dollars because they view the U.S. legal and financial system as a predictable sanctuary for their capital. Economists are now warning that we have entered a financial interregnum. This is a dangerous transitional era where the centralized, rules-based financial order is beginning to splinter into competing, autonomous economic blocs. The aggressive overuse of financial sanctions directly violates the unwritten rules of neutrality that are required to maintain a global reserve currency. When a hegemon acts unpredictably and weaponizes its currency, that trust evaporates. That erosion of trust is exactly what is driving the rapid, systemic de-dollarization efforts we tracked in the data. Countries are leaving because they are increasingly reluctant to remain dependent on a system that can be weaponized against them at a moment's notice. This creates a structural crisis for the United States. With the national debt skyrocketing, the government desperately needs foreign buyers to absorb its treasury bonds. If those foreign buyers successfully abandon the market, America's ability to fund itself is severely compromised. We are left with the ultimate paradox of weaponized interdependence. In the process of using the global reserve currency to punish its rivals, the United States is slowly destroying the very financial empire it was built to protect.